Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you gotta get spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun. All right, guys. Tuesday. We got some interesting things going on here in the Treasuries this morning. I came in, you know, like I turn everything on before I go and eat to have it all ready for the stream. And like we were looking really good. And now it's completely turned down. Let's go and check out the charts. We got some big data coming today, though, at 10 o'clock. So I think everything's kind of tentative until then. Okay. So here's the Treasuries. Going back here to the beginning of May, remember that this was the whole tariff noise, right? And then here was the period where everybody and their dog on social media was like, let's go short Treasuries. And this is a trend, and especially the past week or two, we've really broken out, and it's starting to look significant. Although I think when we go to the daily charts, we'll kind of probably still see some mean reversion, right? There was some mean reversion in this area, right? But much higher overnight. But here in the first little bit, in the last 30 minutes, we've switched back around. I don't know the words that I want to use to describe that, but a pretty quick turnaround. Now, it is the first day of the month. That tends to be a buy, and we got a bunch of macro data coming today. So that may end up just being, you know, irrelevant. It'll move big, perhaps. All right, S&P 500, about where we were yesterday. A little bit of some downside action that we're seeing here, though. Oil. Well, oil still kind of just going sideways after the post-Iran conflict stuff. But it is kind of rearing its head a little bit this morning, so that's interesting. Gold and silver. Well, gold come back in a big way today, huh? Look at that. I mean, this was starting to look pretty bad, but now I'm like, oh, okay. It's just in range. Okay. Silver still looks great. Copper taking another little jump higher there as well. Interesting. And the dollar going a little bit lower once again. How low do you think the dollar can get here this year, huh? I think I don't want to be one of those people where like everybody short the dollar and you get caught on the rally, right? But it does kind of seem to me that it could go further, huh? I think I'd rather wait and look for the moment where it kind of breaks everybody's stops and shoots back up a little bit. And then double back down on it. All right, so I have to apologize a little bit late because I was just having some weird issues with my contact. I don't know, a piece of dust in it or I don't know what, but I went up and washed it a little bit and it seems better. I am still kind of thinking maybe I should go and just like change the contacts out because it is July. Maybe the money is gone from the Treasury to gold? Well, the money was moving into gold long before it started coming out of the Treasuries here. So let's come over. First thing is I gotta make sure that I am connected to my news squawk. And let's check Twitter here and see if there's been like a headline. Gaza negotiations, there's a possibility of reaching an agreement soon. Okay, so I saw a news story yesterday kind of suggesting that they were talking about like making a push to try and get a deal with Gaza and like really pressuring them to make a deal for in Gaza. But they had kind of like, they weren't ready to do it. But now Donald Trump is out talking about it this morning. That kind of means, I think, that they're going for it. So hopefully they get one this time. But that means that is going to be more in the headlines and coming up here. I guess they feel that the Iran thing is done. You know, it's so thinking back, it's been a while. It's been a few days with the whole, well, I guess it's been a week, hasn't it? With the whole Iran conflict. And afterwards, the big narrative was an argument over whether America actually accomplished anything. Did they actually destroy the facility or not? And there was a report that was leaked to some of the mainstream news outlets that suggested that it probably didn't do anything. And that was an intelligence assessment from like one intelligence agency. And the administration immediately came out and said, no, that's not accurate. Now, I think that people understandably don't completely believe just what the administration says on a thing like that, because they're going to have this tendency to just want to claim victory and move on anyways. But they were implying that after shortly after the bombing, that the Israelis sent a team in to look at the damage, and their assessment was that the job was complete and that they had set back Iran's nuclear program several years. Now, I'm thinking, you know, it's been a week now. There hasn't been anything more on this. The Trump administration has definitely moved on. They have definitely moved on. I feel that if they had not really destroyed the facility, that Israel would still be flipping out. So that's why I think that, and the administration didn't just say, well, it didn't happen. They kind of have a reason why they think that it was destroyed, right? So I think that it was destroyed now at this point. Maybe we'll get some more information and we'll find out that it wasn't. But for right now, I think all of the behavior that I'm seeing is in line with that. Iran is like no longer considered a threat right now. And Iran immediately turned around, like put a bounty on Donald Trump's head and all of these sorts of things. So he's done with them. I think maybe he thought afterwards they could negotiate and normalize relations with Iran and things like that, but no. So he's moved on, and since his like foreign policy focus was all on Iran and now it's gone, he's moving somewhere else. It's over to Gaza. Kind of interesting. But that does possibly present some risks for oil, right? And for us in the treasuries here too, because when oil was going up, we were seeing a little bit of selling in treasuries. Nothing too crazy, but it was the thing. We'll say we do appear to be in a little bit of a liquidity hole down here. It's just kind of stopped. It's not doing much of anything. Oh yeah, so I was scrolling. Let me keep going. I would like to do tax and spending bill on July 4th or somewhere around there. Okay, so what's been going on over there is that the House passed their bill. The Senate is passing theirs, and then it will go into reconciliation. I kind of think that the reconciliation bill is going to be rough, because conservatives in the House feel that basically everything that was put in the bill to get them to sign on is being taken out in the Senate version of the bill. So, meanwhile, and we got to go and check this. Elon Musk is upset that the bill is passing. I think now I wonder, is it that he just really doesn't like that they're taking the subsidies out? Or is it that he really thinks that it like significantly increases the budget or the deficit? because this is a whole thing that, like, they say that it increases the deficit, like, what, $3.8 trillion or whatever? But that's only because they're extending tax breaks that are already in effect. So I feel like that is a little bit deceptive. Especially when we come in here. Let's search for Fred. Federal revenue as percent of GDP. Okay. So federal deposits as a percent of GDP. Now, when Donald Trump was president in 2016, they passed the tax breaks that they're talking about. Okay. Did federal receipts as a percent of gross domestic product? Well, they did go down a little bit and then spiked up after COVID in 2022 and has now kind of come. So, I don't know if you're splitting hairs. It's kind of like you did cut taxes that is like less revenue coming in, but then the economy grows, kind of cancels each other out. There was COVID in there. I don't know if you can really make a determination about how much a revenue was made or lost based off of that. But I do kind of feel like that to say that it was $3.8 trillion is a little bit silly. So does Elon Musk not know that? And he's falling for this Democrat line that it increases the deficit $3.8 trillion. Or does he know that and he's just pushing that line because he really, really wants the subsidies? I wonder. But it does look like, well, they haven't opened up yet. Oh, yeah, that's pretty ugly. That's a pretty ugly drop in Tesla, isn't it? Yeah. Did you see what Trump was tweeting about it this morning? I was a little bit like, whoa. Let's see here. Elon Musk knew long before he so strongly endorsed me for president that I was strongly against the EV mandate. It is ridiculous and was always, and was always a major part of my campaign. Electric cars are fine, but not everyone should be forced to own one. Elon may get more subsidy than any human being in history by far. And without subsidies, Elon would probably have to close up shop and head back to South Africa. I think that's a ridiculous assertion, but it's just crazy that he's, it's always his hyperbole, right? And it's just interesting that he's pulling out that kind of stuff on Elon Musk here. No more rocket launches, satellites, or electric car production in our country would save a fortune. Perhaps we should have Doge take a good hard look at this. Big money to be saved. Okay, well, I think that Elon has probably responded, right? Let's see what he has said. What good is Doge savings 160 billion when this bill increases the debt ceiling by 5 trillion? Well, you kind of have to increase the debt ceiling or there's like big problems. So I don't really, in fact, I would favor changing the debt ceiling to a percent of GDP rather than a straight number. Because as a straight number, you always have to come back and adjust it, and it's going to be a constant thing back and forth. And while I do think that you kind of have to have that mechanism in there because it has been the one thing to like force the Senate to do things and stuff, it is causing more trouble than it's worth right now, I think. So I wouldn't be in favor of just getting rid of the debt limit completely, but maybe adjusting it. And perhaps one way that you might adjust it is it's based on a percent of GDP, and there can be different levels, like you get to a certain level and there are certain punishments for Congress, Like the whole thing with Warren Buffett where he's like, well, if everybody in Congress had to forfeit their jobs if they didn't balance the budget, well, okay, I think it probably would get the job done, but it would be like so disruptive to the economy the one time that it happened. I don't think you want to do that. So like instead you make it a soft thing, right? It's like, okay, well, you can't do this, this, and this if you get into this range. If you get into this range, then yes, everybody loses their jobs. And then you can have like carve outs like except if war has been declared. Uzi says this stuff's so stupid. How are we supposed to reach Mars if America goes de facto bankrupt? So tempting to escalate this, but I will refrain now. Yeah, because I kind of forgot about that whole thing where like they were fighting, and then Elon like really flipped out and kind of afterwards was like, that was maybe kind of going over. So I think I'm leaning towards that Elon has, obviously he does want the subsidies, but I think that he's also kind of fallen victim to some of the portrayals of this that I don't think are accurate. I'm not saying that the bill is all good, but I do believe that this claim that it raises the deficit by 3.5 trillion is misleading, because that's only by extending tax breaks that have been in place for the last 8 years. So you have the choice. You can either increase what the CBO says is increasing the deficit by $3.5 trillion, or have one of the largest tax increases in history. It's just take your pick. Okay, well, I'm watching here. If the Treasuries are going to decide to take another step lower, they are kind of starting to gnaw at it a little bit. Maybe I will just end the stream a little bit early so that I have time to switch my contacts out, because now this contact is just not seeing as well. That's better. I don't understand the debt ceiling, especially after reading HJR. I'm not familiar with that one, but I would say the primary reason that the debt ceiling still exists is because it's like literally the only leverage that anybody has in Washington to try and force any kind of movement on budgetary things, right? Like the way that it works right now, because there is no punishment for dealing with the deficit and dealing with our fiscal situation, Congress will always kick the can down the road and do the things that are best for them in the short term. And you can kind of see Donald Trump doing it too. Like, yeah, he wants to reduce the deficit and everything, but when push comes to shove, he's going to prioritize his domestic agenda first. He's going to take care of the domestic agenda first. We need to grow, and then we can deal with the deficit when we start growing, right? And then when we start growing, how are you going to get Congress to talk about it and make the hard decisions? They don't do it, right? Because there's no stick. There's no stick, and there's no stick to attach a carrot to either. So it's just, they just always go the other way, right? So the debt ceiling is kind of like the one line. It's kind of like this cliff that's like, well, we can't jump over that cliff. And then it forces some negotiation. Even right now, part of the reason why we've got this big beautiful bill thing going on is because there is a debt ceiling. Like we extended it out so that we had time to put together this big beautiful bill. And if the big beautiful bill were to fail, then we would probably be starting to stare down a government shutdown again. So that's why. Man, it's going back and forth there at 04 half a lot, isn't it? I think someone has maybe decided, oh, there is another big player there. Let's do our business here, and then maybe it will be free if I'm pushing it down, or who knows what. But okay, so now it's not doing it. There's iceberging on it. I do not really have a predictor of order flow in this situation that says down. But that iceberging at 04 half is kind of a short-term signal down that, like, you could see them bust 04. Let's see if they do that. In this kind of a situation, a call like that is a 50-50. If we were a trend down, I would take that one every time. But in this situation, I've learned from the stats that it's not worth messing with. But I'm sure interested to see what it does, because we've been here for a while. We did a bunch of back and forth, and now all of a sudden there's an iceberg there. It is kind of curious. Say we are getting some decent dollar rallying as the treasuries fall here, which is kind of curious. Trump, when asked about deporting Elon Musk, says, "I'll have to take a look." Oh, is that what happened an hour ago? Okay. Okay, so it took 5,000 contracts, but they did break it. You know what? This contact is bothering me enough that I'm just going to go and change it right now. Okay, guys? I'll be back. That's weird. I totally unmuted it. I must have like clicked and just like barely missed it. I was just saying, so we did move a little bit further, like another tick or two while I was gone. But I'm noticing, okay, 15,000 at 03. I feel like that's pretty fast, but then I'm also realizing, wow, the point of control of the session is 19,000. That's not that much. Usually it's not significant until it's like 30 to 50,000, you know? So that's kind of curious to me. I am starting to wonder though, like, okay, so the news that we get, we're getting ISM manufacturing and we're getting Jolts. So now with Jolts, we got 7.3 million as the estimate and the previous reading was 7.391. Maybe we can just say that was 7.4. I feel that job openings are worse than they were in March, April. So I don't know if 7.3. Actually, let's see if I can come back over here, Jolts, and we can look at the kind of the trend here, right? So April, it was pretty bad at 7.13. So 7.3 is probably within the range. I don't think that I could get it more accurate than that. So I'm thinking if these guys are selling because they know what the news is going to be, it must be the ISM number. And would we see a number higher than 48.8? Maybe like a 49. Even if it was above 50, that would be something, because we've been under 50 for such a long time. But I'm just kind of seeing the way this has been going kind of does make me wonder a little bit. So normally, the first day of the month, it would tend to be a little bit more of a buy. So to see, I don't think that it's like the selling that we've had is so strong that it's like outside of the norm. But it is starting to get to the point where I'm kind of a little bit like, Oh, now because I need to switch over. I'm so silly, guys. I need to switch over to N over here, right? 2YYN. There we go. Not available, huh? Oh, because it said 24. 25 is not in there, so I need to update my instruments. And there's another tick. There's actually some decent delta on this too. Like this overall trend from the very beginning is probably about 25, 30, 26, 26K. And since we've been watching it, like just this latest move from where it kind of had a liquidity hole and then it broke, it's been about 10K. I do feel like even though it kind of seems like a breakout, that it's been relatively calm. It hasn't been as exciting. Maybe that's just me, though. Maybe that's just me. There we go. July. And there we go. I guess I should recenter here again. We are starting to get to some of them levels where, well, I see. No, that's kind of interesting. I've never seen this before. Coming back over here on our cost basis indicator, like the cost basis as we're coming down, that break even line for the shorts is just plummeting. I haven't seen that before. So, but actually, I think that kind of makes sense because again, even though there's been some decent like icebergs that we've gone through at levels and so forth, the liquidity has been, you know, it hasn't been that solid. Like the latent liquidity has kind of just, they're not really willing to do a lot. It kind of seems like a trend down on a relatively, well, I don't know, 20K is not a small meta order, but it's not a huge one. And the liquidity is like not really interested in participating yet. Yeah, back to 112 evens. But so that's why this cost basis back to here. That's why this cost basis is coming down, because the market makers didn't really pick up that much inventory up here. They're picking up more inventory down here, and they're taking a lot of profits on it as the way it goes too. So this move down is not hurting them as much as it normally would. Although they are like on the brink. They are on the brink. So if they were to extend further here, that would be something else. But we're likely to see things pause now at 112, I think. Like, I think the most likely scenario here is we pause until the news. I don't know, 45 minutes is a long time though. Yeah, we already have 12K. That's a good point. Not that 12K is huge again still, but they did kind of bounce off of it even. They like hard bounced off of it. Wow. Okay, wait. So I've been reading this post. This is not necessarily market related. This is kind of more software development related, but the thread, should I get rid of juniors that generate AI slop? We're dealing with a problem at my company that's annoying, but honestly, it's not that surprising. Out of 70 devs, about 10% are juniors. Lately, I asked a few of my mid/seniors to pair program with them to see where they're at, and what we have noticed is that a lot of them, when they hit something hard or challenging, they instantly open ChatGPT and start writing out the problem and copying the solution without understanding the problem or how to solve it. Yeah. I'm finding myself just copying and pasting the code that it gives me more often than I did before, but I'm always going back and trying to understand what it said, because I'm not pulling it out unless there's like an issue, you know, to be solved. And you know, especially if it's just kind of like a misunderstanding of the API or something like that, then that's going to come up again, and I want to know what it's saying. So I always, and I really like that it goes into detail. Okay, here's the code. Here's why there's this, and this. Okay. Anyways, now I get that AI tools are part of the workflow these days, but the point of pair programming is to learn from the more experienced dev, ask questions, think through problems together, not just offload the thinking to an LLM. These juniors are working on client projects, and the stuff they generate is often low quality, barely understood code that my more experienced devs then have to clean up, which makes them annoyed. Circles keep expanding, they waste time, burn money, and adds no real value. I'm running a business, and I do expect value in some form being generated, so now I'm stuck. Is this a hiring problem? Our processes, HR screen, technical test, culture fit, stage decision. Should I put more structure into mentorship and training? Or should I just cut the ones who aren't delivering and spend more money on experienced engineers, which I could easily afford? Appreciate any real-world input. Edit. After a short meeting with directors, we decided to replace the 7 juniors that we have with 5 mid-senior developers and change company policy to strictly not hiring graduates anymore. That's bonkers. Just like that. I kind of feel like that making a conclusion about a particular developer based on one sit-down pair programming session with them is a little silly. You know, this kind of hits at something that I see in corporate America overall in general that I really think needs to change. And that is that corporate America seems to think that good employees, you just find them. That you do a bunch of interviews, and if you have the best interviewing process and all of these sorts of things, you'll find the best developers. And if they're not the best developers, then, you know, get rid of them and keep churning through people until you find the good ones. And I really don't think that works. What I've seen from companies when they do that is you churn and churn and churn, and you never really develop a team. You never really develop a team where developers can really grow and thrive and become those really high-class developers that you want. And anybody that is a really good developer or who has been on a really good development team will come in and immediately see that there's a problem and not want to stick around. So this kind of churn thing, I think, hurts you in the long run. And instead, what I find works is you know, of course, you have a good hiring practice and everything. And if you have people that are really, really not doing well, then you do have to be willing to cut them off and quickly. But that having a team and really working with people and developing people into good developers works a lot better than just hoping that if you go through enough people that you'll find one that's good. And this guy is doing exactly what I don't like, but let's see if people agree with him or not. Octavius is going to take the hero here. You know what? I think that trade would make sense, except for that I kind of don't like to do anything when there's big news ahead, but I think everything else about the situation seems to match up, doesn't it? Now, the one thing is that the dollar has been rising this whole time as the treasuries have been falling, and the Japanese yen has been falling this whole time. So I'm not seeing any kinds of signs of a change in that trend over there yet. But we are definitely at a spot in the treasuries where this tends to start coming through, doesn't it? Wow. Here's a post on Reddit complaining about people not tipping their servers. And they want you to pay 30%. They want you to tip 30%? I thought that the standard tip was 20%. ZF traded a lot. Yeah, I mean, I kind of feel like so there's a couple of things here. We are at the cost basis line, and there is a distribution forming at 112.00 half. So that is a situation where the hero trade will tend to come in. But this has been a pretty strong downtrend, and one that we don't really know or understand what's driving it. I don't think. And it's accompanied by anti-correlation with the dollar. Like, the dollar is rising up, which is kind of curious. And the Japanese yen dropping down. In fact, the yen just kind of took a little bit of a further dip. So this kind of seems to me like if you take the reversal, it's kind of a high risk trade, I think. I don't know. I mean, if it goes further, it's not like it's going to go way further, but I just think that the chances of it pushing a little bit further are a little bit higher than I'm comfortable with. And again, we've got news at the top of the hour, so I'm not quite sure. Well, and we've got the S&P S&P opening in 3 minutes, so that also tends to change the flows a little bit. So I'm not sure. I think that if I had to place a bet, that I think that Octavius is still going to make money on it, but it's an awfully dicey one, man. But to the other point that you were saying, it looks like it kind of leads the move. Well, we are flattening, particularly between the 5 and 30 has flattened a little bit through this move. Wow. So here's another post on one of the recruiting subreddits. If you've accepted a job, signed the paperwork, and are due to start on Monday, a text at 4:47 on the Friday before isn't cool to say that you've still been interviewing and you've accepted another job. Can you believe? I cannot even imagine like accepting another job after I've already signed paperwork and everything to start something on the Monday. Wow. Yeah, that was not, I don't think that the company could do anything about it. I don't think that the person that did that will be punished, but that's bad form for sure. Wow. A bunch of people speaking now. Talking about oh yeah, Powell, Gerard, Bailey, and Ueda speak. Not really that big of a deal. Well, Powell will speak at panel discussion titled Policy Panel at the ECB Forum on Central Banking in Sintra. Ian's questions. Okay, so those haven't necessarily been the largest impact moves or kind of forums in the past, but there's enough of an opportunity for them to say significant things that I wouldn't just dismiss it. A lot of people on Reddit are posting about that Trump said he'll look at deporting Musk. Tell you what, like the posts on Reddit from people struggling to find jobs never really died off, but yeah, it kind of seems to me that this week that a lot more people have reached their breaking point, like because I think what happens is you get to like that 6-month mark or wherever when a lot of unemployment benefits end. And that's when people really start pulling their hair out. And I think that like another group of people have gotten to that point. And I think that it is that kind of underlying economic weakness that has been there in the economy all year, frankly, and is only just now starting to kind of show itself in the data. that is a major factor behind why the treasuries have been up so much over the past week or two. But we'll see what the... Now, I guess something that could screw this up is maybe it is just a currency correlation. Maybe it is just the Japanese yen moving down. I mean, the flows on this, well, 20,000. I kind of feel like that's probably more than just a currency correlation, but it could be a currency correlation. And then maybe the news comes out and the news completely contradicts the move, and it's not that somebody thinks they know what the PMI is going to be. You know, and if the PMI was good, or sorry, bad, if the PMI was weaker than expected, that could really disrupt this trend. Because I think that a lot of this liquidity back here is probably still damaged. Granted, we got 30 minutes. I don't know. Probably, I guess the liquidity probably isn't going to be such a huge deal, but there's going to be all these levels up here that if they bust, people will be upset. So I kind of feel like this is setting up a situation that will make the news at the top of the hour really tense. Hmm. So this is one of the things that I always find interesting, like when you're looking at chart patterns and things like that. Well, actually, I'll just show you. This is kind of like one of the things that kind of, I think, led me to realizing that most chart patterns are nonsense. But if you look at ZB, it's like we're just in a cluster, right? It's just not doing anything, right? When you look at the 5-year, it looks more like a bounce. When I look in the 5-year, it looks to me like it's just kind of slowing down a little bit. So I could see somebody thinking, oh, this is slowing down and it's going to go down like that. But then you look at this and you say in CB and you're like, no, that's just going to go nowhere for 45 minutes. So when I notice a pattern, I'll look at the other instruments and then find that I don't get the same read in the other instruments. So I'm looking at things that are too small to matter. Too small to really be predictive. Okay, so I'm already seeing that at this conference that they're saying more about the economic conditions than normal. So I think that, okay, well, there's the up move. Well, it's only a few ticks, but that's not bad. That to me was like the hero trade working out, even though it was only, if we took it at 0.0 that's 2 ticks, that's still it worked. I see. So Quant Connect has some job openings, but they're in the UK, so. But that's interesting. I've been taxed by 2 states at once. Imagine being taxed by 2 countries at once. Yeah. Well, so what I've been finding is that what companies will do is they will kind of have like they'll be like registered in every state, so that even though the company is headquartered in one place, your income is still only coming in that state, and so you still only get taxed by that state. But that might change when it's country. I don't know. All saying that they will remain patient with rates. So we get the first set of PMIs here come in. Higher than expected, 52.9 versus 52. Scratched it in Z and got 3 in Z. Oh, okay. They sure came back down really quickly, didn't they? I kind of identified that like, well, you got 2 ticks. Because I was thinking, wouldn't you go to the VWAP? But it kind of didn't look like it was going to do it. And it didn't. Kind of weird. The lies we tell ourselves to keep using Golang? Wow. Look, that's a new low. I think that's from a comment. The thing is we get these PMIs and jolts at the top of the hour. Are these guys still going to be talking? Okay, apparently one of the holdouts on the Senate bill, Ron Johnson, is now saying that he's going to support the bill. That came out a little bit before that recent rise up there. I wonder if there was another Fed comment. I don't know. I wouldn't expect us to move up on the bill becoming more likely to pass. Oh. I can't say if July is too soon, but I wouldn't take any meeting off the table. That was that. That's what that was. Huh. Okay, well, I think this is too dangerous to be taking a position, huh? Because they're like reacting to every tiny thing that they're saying, and there's still plenty of time for them to talk. And it's coming up quite a bit on not that much volume too. So I'm not the only market maker that's like, fuck this. Look at the dollar back and forth on all of this. Still really makes me wonder though, what was the driver behind the initial sell trend that we had? So the liquidity is looking a little sketchy. We're not quite into the the 1 minute pull, but it's already now. That might be because of this this central bank thing, right? I have to say, I think I kind of got it wrong earlier when I was saying, well, you know, like events like this haven't been like really market driving in the past, but there is chance they're gonna say stuff that moves us. And I think what the kind of the correct take would have been I wouldn't expect them to say anything that's really significant long term, but they probably are going to say things that drive small moves. So it's kind of turned things into a little bit of a crapshoot, though, hasn't it? Although overall a little bit higher. So it still kind of suggests to me that the market thinks that central banks are going to bring interest rates down. 30 seconds. Okay. Okay, so it is higher than forecast. The ISM 49 versus 48 spot 8. It's only slightly. Jolts, though, 7.769 versus the 7.3. That's quite a bit higher than expected. So that's probably why we're seeing the selling here. I think I'm gonna leave it there, guys. It's a little bit of a sell. We'll kind of see maybe over the next hour, they'll kind of sort things out and there will be more of a move. Right now, it kind of looks like that the liquidity is just so damaged in this whole area that they're having a hard time getting away from 112 even. And I could see reasons for people wanting to take both sides of this, right? So, yeah, that makes it messy. Oh boy. Yeah, very interesting. Okay, well, I think I am going to get going. I'll see you guys tomorrow. In the meantime, stay excellent, team.